Your BS strategy does not work. If it would, you'll be making money already. I've already proven to you 100 different times in 100 different videos why trading a high risk reward is simply not profitable. But today, I'm going to prove to you that what I do every single day is actually profitable. By the end of the video, I'll show you the entire backtesting results. Try out what I'm going to teach you in this video, and I promise to you, I guarantee you that you will have great results going into your next trade. So unlike your mentor, which isn't even profitable, I'm not going to cherry pick setups. I'm going to take a random date anywhere between 2020 and 2025. So let's see what date we're going to get. It's December 12th, 2022. Alright, so here we are at the 12th, or I guess 13th, because this is the next trading day, December 2022. In this entire backtesting session, you'll see that we will start at the daily chart before taking a trade, because as a day trader, that's simply what you'll like the most. Now, you'll also see me go into the weekly and monthly time frame occasionally, but that is mostly going to be it. Now, on the daily chart alone, what do I like to see? I like to see established movement onto the up or downside in order to frame a framework. This is nothing. Don't just trade blindly. Have an entire framework around your trade idea. Now, in this example, we don't have established movement in neither direction. The price is just hovering around and it's just choppy currently, which in a negative risk reward is great. We like choppiness. We don't like when the market is just trending and trending. So in this case, are we going for the previous day high or for the previous day low? Because at the end of the day, this is really all that I care about. Every single day, I will ask myself the same lame question. Now, in this case, we'll probably go for the previous day high. But what else is there? Now, look, most of you guys, you only look for things that are speaking for your trade idea, but I'm the opposite. I also like to look out for things that are speaking against my trade idea. Because at the end of the day, you are analyzing the chart and not just looking for, okay, we'll just go for the upside and I have 10 different reasons, let me take the buy. So we also have relative equal lows on here. This is where a lot of you guys will get confused, because when you have, let's just say, some kind of relative equal high in here and also a relative equal low, and then price is just hovering around, you can't really tell whether we go for the high first or for the low. In these cases, it's important to understand that concept is basically your answer in all of these scenarios. Now, the context in this case is that we are going for the previous day high. So we really only care about the relative equal highs for now. The relative equal lows can become important in the future, but right now they are not. So this is basically all on the daily chart alone. Now we will drop down onto the 4-hour time frame. Now, what can we spot on the 4-hour time frame? Pretty much the same, but what I like to mostly look out for are FVGs that have been not traded back into yet. In this case, we can't really spot that. Now, also another thing, don't do something like this when you're going on lower time frames or any other time frame. Don't zoom out onto the chart until you see months worth of price action. That's just not smart, because you're really just getting data that isn't even important in the current market that you're trading. So in this case, we'll probably go for the high and not for the low. In this specific case, there's nothing really on the 4-hour chart alone, so we'll drop down onto the 1-hour time frame and look for more information. Now, once again, guys, I'm not just looking out for things that are speaking for my trade, but also against my trade. There's a lot of liquidity residing in here, right? And usually this would actually not be a good opportunity to take a long onto the upside, because there's just so much liquidity, because these are not just relative equal lows, but this is an entire engineered liquidity type of situation where we're just going higher and higher without actually taking fuel out of the market to actually go higher. Now, let me explain that to you in a different sense. So if price is just going into one direction, so in this example higher, and it's just having little to no pullback and then just trading higher, a little to no pullback and then just higher, that means that the market is basically not efficient, because the market needs fuel in order to go in one direction. Now, take a market like this, where going higher, going to 50% of this entire leg, and then higher again, going to 50% of this entire leg, and then higher. This means that there's actually liquidity behind going into one direction. The problem here is that we have no liquidity going higher, basically, because we're not taking out the opposite direction of market participants, which in this case is the buy side liquidity in here. But what I always like to say is that context matters a lot. If the context aligns well, then you can still take a trade. So in this case, we're just simply going to enter the trade, and our take profit is going to sit right above the previous day high, aiming for 10 pips. And our stop loss is going to be right below the previous day low, right? This is going to ensure that if we're actually wrong on the trade, then this is the last possible point that is going to protect us, basically. Now let's look onto the 15-minute time frame. As you can see, if there is any entry refinement that we can do, not really. because there's no effigy, there's also no candle that's suggesting that we'll go to the downside first. So from here on, we're just going to take the trade as it is. Now here's the next thing, always risk up to 3, even 4% with a negative risk reward. Now guys, this win rate is so high that it's not worth it just trading 1%. It's just simply not worth it. And you're also certainly not going to lose, like 10 times in a row. It's not going to happen with such a high win rate. Now this is a take profit hit and basically our first win for the session. I like to remove the things because I don't like messy charts. So here we are on the daily time frame again. Now as always, we want to ask ourselves a very simple question. Are we going for the previous day high or for the previous day low? This is where most guys are really just going to mess it up because they don't really understand what is actually going on within this entire chart. Why? Because let's just further analyze. Yes, we have spotted the relative equal highs previously, but do they really matter still? Not really. The reason for that is because of this candle alone. This candle was indecisive. It didn't really go to the upside, it didn't really go to the downside. It kind of did both, and now it's just quite close to where it actually started at. So this is what I like to call a 50-50 candle. Of course, you can take a guess whether it's going for the up or downside, and in hindsight, it will be looking very obvious. But still, this is not a high probability day, so we're not going to take it. And we're just going to skip on to the next day and see what this will... And guys, this is the same thing again. We don't really know if we go for the previous day high or previous day low. Why? Because this is the 50-50 candle. We also have no established movement. This is basically a trade without any context. So we're just going to skip it once again. Now, once again, we like consolidation phases, but there has to be some direction which we want to trade into. So still no trade, and we're just going to skip it. Now in here, there's already a different story. Why? Because this can already count as established movement onto the upside. Simply because this candle has willingness to go higher, similar to what we did in this candle. So you see how this candle is pretty much the same as the previous candle that we have traded. So this is already enough for us to start basically building a framework. This is not enough to take a trade yet. We are just building a framework yet. So are we going for the previous day high or are we going for the previous day low? Probably for the high. So on the daily chart, we have already taken out the relative equal highs. But if we're actually going to zoom out a little bit further, there are even way more relative equal highs in here. Now keep in mind, you have to always wait the confirmation. These relative equal highs do not really matter that much. Why? Because they are just quite far away from the chart. What matters to us more is just simply that it's additional information. It doesn't hold as much weight as, for example, if we had relative equal highs in here, which in fact we do actually have relative equal highs. Because if we're just going to drop down onto the 4-hour time frame, you will see that we have a swing high in here and another swing high in here. This is just out of experience that on the daily chart, if there is a previous day high or low, then probably on a lower time frame, this will be a swing point. So essentially, this is basically the entire framework that we want to trade off from. We have the previous day high, we have the relative equal highs, but also we have a bunch of relative equal lows in here. Now once again, which one are we going to take? And I've told you previously, it depends on the context. We are bullish on the context, so the relative equal highs do matter way more than the relative equal lows. From here on, we're just going to take a trade at our standard time, 0 AM, and we're not going to even target all the way to the previous day high. This is probably not even needed because this is basically overshotting our regular take profit. Now I've made a ton of different other videos explaining more parameters about the strategy. This is really just a back test in here. And our stop loss, let me go into the 4-hour time frame, is really just going to go beneath a low, for example in this one, which is actually the previous day low. You always want to base it off of logic and not just put your stop loss at a random place. Now, can we further refine our entry or have a better take profit for that sense? Now, I can spot this high in here on the 15-minute time frame. As I told you, it's not even needed to go to the previous day high. We like to be a little bit more consistent with it. And there's not really much that I can base it off from, but let's just take this high. Now, sometimes there is just no level where you could potentially put your stop loss, take profit or whatever. But if you have the chance, then always do it. In this case, there just wasn't any high that we could trade it off from. So in here, we're just going to take a trade and see how this is going to play out. Going to go into the 1-hour time frame, so it's a little bit faster. Yes, and that's another take profit hit. Now there you go. This was our second trade for the session, and I'm just going to remove almost everything. I'll leave the relative equal highs in here for now. So now we'll just drop down onto the daily time frame and look out for basically the same thing again. Now there will be a little bit more scenarios where it's just not so obvious throughout this entire backtesting session. So this entire candle has not been printed yet, so we have to skip on to the next day. and from here on we could decide if we're going to take a trade or not. Now in this case, why is this not enough of a reason to actually take a trade? Because if you have a candle, so let me just draw it out for you real quick, that's looking something like this, and the entire body is basically so close to the wick that it's just obvious that we'll go to the previous day high. Let's just imagine that this is an entire daily candle. Then in these cases, most of the time before you're going to get at our regular session time, the previous day high will be taken out, and this is basically invalidating the entire day to trade. So in this case, we cannot take a trade, simple as that, because the previous day low has already been taken out. So from here on, we're just going to skip on to the next day. So in here, this already counts as established movement onto the downside. We have one bearish candle, second bearish candle. Now, you would be saying that this is a 50-50 candle. And if you're just going to take this candle and just put it anywhere in the chart randomly, then yes, this is a 50-50 candle. But that's why I'm telling you, you have to understand these different scenarios in order to actually be able to trade like me. So in this example, the entire context is just a way different one. So this is actually an okay day to trade. Because why? We have relative lows that are very close. This is essentially the same what we have done in here, trading into relative equal highs. This is how we were able to actually identify whether we're going for the previous day high or for the relative equal highs first, instead of the relative equal lows. So in this case, it's the same essentially. We have the relative equal lows on the daily chart, and we're just going to drop down onto the 4-hour time frame and look out for more information. Now on the 4-hour time frame, we also have relative equal highs, but once again, always wait the entire confluence. We'll go for the previous day low first and not for the previous day high. On the 4-hour chart, there's not really much to say besides that we have actually this FEG, which now is a protective swing point. Since we have traded into it, this basically is going to protect our entire position, which doesn't mean that the price is not going to go in here and maybe even higher and then only reverse. That can happen. But a lot of the times, this is going to be a protective swing point. Now, another thing that is speaking against us are the relative equal highs, but they don't matter too much because of the context. So from here on, we're just going to drop down onto the 1-hour time frame. So in here, we're just going to basically execute at our regular session time, which is 0 AM UTC Standard Time. But I was actually able to spot a little bit of optimization on the 4-hour chart. Since this candle is already bullish, which the entire concepts that I'm teaching are fractal. So in this case, this already established movement onto the upside in that case. So we'll probably actually shoot for this entire candle high. We will drop down onto the 1-hour time frame and pretend like we will take the regular position, right? Which will be looking something like this, which is almost 10 pips. And then our stop loss is going to remain at ideally 50 pips, right? There's not really a swing high that's too close. So I'm just going to set it in here. In this case, since we know that we'll go for the 4-hour candle high, we'll actually just move our entire entry. This is just going to result in a little bit more profit. Now guys, these little small adjustments make a huge difference over the long run. So this is not take profit. So in here, we're going to remove almost everything and go onto the daily chart as always. Now first of all, we need to have this entire daily candle printed because it's not done yet. It's the one that we have just traded in. And yeah, from here on, we can already see if we're going to take a trade or not. Now here, once again, it has already taken out the previous day low before our session time. Now, in case you're wondering, so I have said it in the presets that it's always going to skip at the regular session time. It has already taken out the previous day low, so we can't really take it. So in here, we're just going to skip the entire day, not taking anything. And it's the same scenario. We have taken out the previous day high, so no trade. Skipping again. Now this is already a different scenario. Why? Because we have established movement and actually clean established movement. Now in here, what we had in here with the bearish candles, that's more of an experience thing that I wanted to give you along the way, because there was relative equal lows and all, but those are actual clean established movement onto the upside candles. So we have the entire relative equal highs in here, and we're actually approaching towards these highs. But another thing, or more importantly, are we going for the previous day high, or are we going for the previous day low? We'll probably go for the high, of course. So on the daily chart alone, there's not much to say besides that we have actually left an FEG in here, which could be dangerous later on, but we're not going to consider it because we have established movement onto the upside. So we're just going to go into the 4-hour time frame and look out for more information. We have already identified that most likely we will go for the previous day high and not for the low. What else can we spot on the 4-hour chart? We have this FEG, which could be a potential entry in order to trade higher, but we'll see on the 1-hour chart. Now what can I also spot, which is actually speaking against us? we have a premium to discount range, which we have not fulfilled yet. So at this point of time, when we are just in here, we have not traded into it, but also we have still not traded into it. Since the entire context is actually bullish, I'm willing to take a trade depending on what the 1 hour is looking like. Now on the 1 hour chart, we essentially have very similar looking things, and I would actually like to take a trade simply because the context aligns with established movement and there's nothing looking wrong. Now on the 1 hour chart, I'm mainly not looking for confirmation anymore. I'm looking out for things that are speaking against the trade, and if the 1 hour chart is looking fine, then that's good enough of a trade. So in here, we're just going to pretend as we would take our regular position. Basically our stop loss is going to aim for the previous day low, and since we want to actually refine our entry, we're just going to sit right at this FEG. We're just going to take a trade as it is. Now here's another thing: in case the take profit gets hit before we're going to enter the trade, then you have to close the entire position. So let's see if we're going to get filled. Yes, we actually got filled, and from here on we're going to let the trade play out. Yes, and that's another take profit hit. Now maybe this would not actually take you out of take profit basically, or out of the position because of spreads, but I'm pretty sure it is going to be for most firms if you're actually trading with high quality firm. Now guys, by the way, if you're trying to pass prop firm challenges, I'm going to pass it for you risk free. A link for that is in the description down below. So let's just see if we're actually going to get higher. Now the take profit has already been hit, but just out of interest, I would like to see if we're actually going to get higher simply because of spread issues or anything like that. And FX replays, like always, just glitching, man. I restarted it and now it's working again, which by the way, TradeLens is going to come up with a backtesting platform on its own. If you're interested to that, the link to TradeLens also in the description down below. So from here, we're going to remove a couple of things, and this is, I think, our third trade for this entire session. And we're just going to go into the daily chart and do the regular old things that we always do, right? So this entire candle has not been printed yet, so we have to skip it. And yeah, from here on, we have already taken out the previous day low, so this is basically also no trade idea for us. Now the only thing that could speak for us taking this trade for this one is that we have relative lows in here combined with a daily FEG. But since we have already taken out the previous day low, we're not going to take this kind of setup. So we're going to skip the entire day. Now we would have been right, but that is no problem, guys. Don't just think that, oh man, this would have been a very nice trade if I would have taken that. Don't think like that, because this is going to destroy your trading. I guarantee you that, because I've been there myself. So from here, can we spot if we're going for previous day low, previous day high? No, this is a 50-50 candle, so we're just going to skip it. Now this is more of a niche scenario. This is why I like doing these backtesting sessions over the regular videos that we're doing, because they are just showing more niche examples that you have to look out for. Now what can we spot in here? In this entire price action move, we have traded higher, and usually we would say that this established movement onto the upside, right? We have clear willingness to go higher, and also the previous day high has also not been hit. In addition to that, we have relative equal highs. It looks perfect as day that we're just going to take a trade onto the upside. But as you can already spot, this entire candle did not open right in here. If it would like at least open a little bit lower than the previous candle closure, which is in here, then that will be fine. But in this case, since it's just closing that low, we're not going to enter the trade. Dropping down to the 4-hour time frame to see if we have more information, but that is pretty much it. That's not a trade that I would like to participate in, and we're just going to skip the entire day. Yes, and this is exactly why you should not trade these kinds of scenarios. Now, I know, granted, you be saying that, yes, but we have also avoided a couple of days where it was obvious that we'll go for the previous day high or for the previous day low. But in a negative first tier ward, it's way more important avoiding the bad trading days than actually missing out on the good trading days. Keep that in mind. So in this case, previous day high, previous day low, it's a 50-50 candle, guys. By this point, you should already understand it. This is a 50-50 candle. Now, there is still information that you can build off from. We have taken the relative equal highs, taken out liquidity, maybe that is fuel to go lower. But we're not going to take this into a more advanced type of analysis, because this is exclusive to my mentorship students. Now, from here, we're actually going to skip the entire day and see what we're going to get. We still can't tell, it's a 50-50 candle. We want a little bit more established movement. And this is still a 50-50 candle, we're just going to skip it. Now from here, it's already different, because we have established one big candle showing willingness to go in one direction. Now, what else can we spot on daily chart alone? I'm going to zoom out a little bit. Remember the relative equal highs from earlier? They're still there. And then also, we have even more relative equal highs. This is a framework that I love when you have multiple relative equal highs aligning. Now keep in mind, these relative equal highs, so these ones, they don't really matter that much. Why? Because they are just very far away from the chart, but we still consider them, although they are not holding a lot of weight. So in here, are we going for the previous day high, or are we going for the previous day low? Probably for the high. So we're going to drop down onto 4-hour time frame and look out for more information as always. These are essentially also relative equal highs now, because this candle is a swing high and here's another swing high. So they also contribute to that. Now, of course, we have relative equal lows on the chart. That's always going to happen, but the framework, the entire context is onto the upside. So from here, there's not really much to say on the 4-hour chart. We're just going to drop down onto the 1-hour time frame and look out for more information as always. There's, once again, also not really much on the 1-hour chart. So this is basically a trade that we're going to take solely based off daily bias. You can also take that in the right context and the right conditions. And this one is totally okay. So we're going to take a trade as always. Our take profit is going to aim for 10 pips, which is actually overshooting the previous day high. But the reason why normally I wouldn't take this is because this is overshooting the previous day high. But in this case, this entire candle is basically as big as the previous 4 candles before it. So this is clear willingness to just trade higher and even potentially reach out for those relative highs in the future. So once again, this is a valid trade entry and we're going to basically set our stop loss below all of these lows, because this is going to result in, closely to a 50 pip stop loss. I can actually spot even more relative lows in here. Now, of course, the lower you go, the more relative equal lows you'll find, but there is a major difference. So let me explain it to you. If you have a relative equal low, such as in here, but then just price is going higher, and then you have a low in here and another low in here, then these relative equal lows are not just that, okay, we have this swing low and this swing low and this swing low and this swing low. It's not like that. It's actually, the relative equal lows are only because of these 2 swing lows. These relative equal lows are something separate, right? The reason for that is because if you're going to take it like that, the most lowest point, this is an example for relative equal lows now, the lowest point that is contributing to the relative equal lows is quite far away to the highest point that you're looking out for. So these are not relatively equal close to each other anymore, right? So only relative equal lows when they're closely to each other, right? But once again, those are also relative equal lows, but just on their own story, which is basically why we're going to put our stop loss right in here. And that's basically going to be a normal trade. If there's any entry refinement, then I would like to do it, but I can't really spot a reasonable level that we can trade into before that. So from here, we're just going to take a trade as always. Guys, risk 3%, it's 100% worth it doing that. If you're going to trade anything less, then it's not really worth it. And that's another take profit hit. Now in these cases, you'll be saying, well, we have actually gone into the take profit without even going that much into a stop loss. Yes, but this is not going to be every single day. That's why you actually have to be prepared for the nuances that the strategy has to offer. Now guys, before I will show you the entire backtesting session, bear with me just for one little moment. Now I have a prop firm passing evaluation service. In case you want a prop firm to be passed, I will pass it for you. Everything is linked down below. If you want to trade with me side by side, reviewing all of your trades and getting a closer look into all of my personal trades, my mentorship is in description also down below. And as you can see, my strategy, if you would have traded it from the 13th December all the way to the 8th January that we have randomly decided earlier in the video, you would have had a 100% win rate. Now guys, it's not going to be 100% every single time. However, this just shows how powerful it is. You wouldn't have to take a single loss in an entire month of just trading. We have made more than 4% on the entire account, which is equal to more than $4,000 on a 100K account. Now guys, if you want to know more nuances about the strategy, then click on this side of the screen. It will explain to you everything from A to Z on how to actually trade the strategy even better. And if you still haven't clicked on the video, then subscribe to the channel and like the video, as these videos take a lot of time to make. Thank you guys for watching. See you next one.